Hi everyone, this is Matthew Cruz with Comstock Investments. I'm going to be sharing with you the July USDA supply demand report that came out this AM. Futures trading does involve risk. The risk of loss in trading futures and our options is substantial, and each investor and a trader must consider whether this is a suitable investment. Past performance is not indicative of future results. So looking out ahead to the 2022-23 grain ending stocks, the USDA already projected ending inventories for corn at 1.7. That was about 50 million bushels higher than what the average trade was looking for. It was within the range, but it was higher from where we were at last month at 1.4. Soybeans came in at 230, a little bit more than what the average trade was looking for 210. But it was down 50 million bushels from last month at 280 million bushels. So it's still pretty low overall. Even coming in slightly higher than what the average trade was looking for. Wheat was about spot on at 639 million bushels with the average trade at 641. It was modestly higher from where we were at last month at 627. Looking at what's going on in Brazil and Argentina, Brazilian soybeans, they kept at 126 million metric tons. That's where we were at last month. I don't expect too many changes from here on out. I think they kind of got most of that crop dialed in now. Brazilian corn at 116 million metric tons. They kept that the same. I think we could still see some reductions yet, but it's probably the bottom end of what those expectations would be, about the 110 to 112. So I don't see it dropping much lower than that. Looking at the Argentina soybeans, came in at 44 million metric tons. Pretty close what the average trade was looking for at 43.3, and last month at 43.4. So a little bit of an increase there, not much. Argentinian corn came in at 53 million metric tons. The average trade was actually expecting them to reduce that, and they didn't do that. So he's kept it the same from where we were at last month at this time. Looking at global ending stocks, we came in at 312.9, a little bit higher than what the average trade was looking for at this 309.7. And then we added a couple more from where we were at last month, more million metric tons from where we were at last month. Soybeans pretty close to what the average trade was looking for at this 99.6 compared to 99.2, and a modest reduction there from last month at 100.5. Looking at the wheat, again, came in pretty close on the wheat at 267.5 million metric tons. The average was looking for 267.1, and last month was at 266.9. You can see that their expected Chinese imports for corn are at 18 million metric tons. So that's down from where we were at last year at 23 million metric tons. And then soybeans last year was at 90 million metric tons, and so they're expecting that to increase to 98 million metric tons. Breaking down what's happening in the corn, you can see from last month, of course, we had the acreage report that came out on June 30th that we did revise the acres a little bit higher by 400,000 acres, and then but they only increased the harvested acres by 200,000. We kept the yield the same in the corn as well as in the soybeans, so that stays at 177. We do see some minor adjustments lower in the coming months, but I don't think anyone really expected them to change the yield forecasted if you're in this July report. Beginning stocks, we did add 25 million bushels from last season production to this season, so we start out a little bit higher. We see that increase in 45 million bushels from the increase in acreage here. That takes us up to that 14.505 billion bushel level. And so that adds an extra 70 million bushels to the supply, and that's how we got from this 1.4 billion bushels to 1.47 billion bushels. And they didn't change anything on the domestic side for now. They left that unchanged. In the soybeans, we see major reduction lower, reducing the planted area by 2.7 million acres. and the harvested acres by 2.6 million. They did add a modest 10 million bushels from last season's ending stocks that carried over to this year, but we can see that production drops 135 million bushels due to this drop in planted and harvested acres. They did reduce the exports by 65 million bushels as well, and the crushings by 10 million. So overall, our ending stocks are dropping by only 50 million bushels from that 280 down to 230. And so stocks have been lower than this in the last year and a half, but it's still pretty low. And again, for soybeans, it was moderately bullish, but yet we find ourselves moving lower. We're down almost 62 cents right now in November. Looking at wheat, you can see they made some modest adjustments here to planted acres. They reduced the planted acres by 300,000, but they increased the harvested acres by 500,000. They also added another 0.4 of a bushel to the wheat, threw in 5 million bushels from beginning stocks that carried over from last season. And so starting out, we get a higher production up to 1.781 billion bushels. They added 44 million bushels there to our production in this report. Let's see, they also increased exports by 25 million. So that helped offset some of that gain in the productivity. And so our ending stocks only increased by 12 million bushels. So a modest gain to ending stocks from 627 to 639 million bushels. It's kind of taking a look at what price activity has been doing here. No secret that we've been on a pretty bad market correction here recently. A lot of this is due to outside forces with energies and concerns about recessions. A lot of fund money exiting commodities. So that's been pushing the price lower. Yesterday we actually gapped open, but we couldn't maintain that strength, and that's kind of carried over in today, which so we're down 36 in December corn right now. This isn't the close. So it's another really ugly day. It wasn't was not a positive report for corn, but at the same time, it seems a little bit overdone. Looking out ahead, we're seeing a lot of high temperatures in the I states this weekend, and the drought in the Mid-South seems to be picking up, and so again, it seems a little bit overdone. But we'll have to see how the market closes. And it's kind of similar situation of soybeans today. In new crop, we're down 61 cents right now in the new crop soybeans. Which the soybeans probably had a modestly bullish report today, but yet we don't see yet any positive follow through based on that. And so, so it's kind of frustrating that we're not able to kind of cover out a bottom, and so we're probably waiting on a lot of the same fund money that exited commodities. We're waiting for that to come back and kind of help us form a rally here. And then taking a look at wheat, we're down 25 and new crop wheat. We can see our support level here about this 810 level. So hopefully that level will hold here in the wheat. So if you're a bull, of course, you're going to point out the continued tension and the war going on in Ukraine and how that's disrupted the wheat and the corn exports there. I point out the temperature and the weather forecast, how it's heating up. We're going to have a lot of 90-degree weather days coming forward, and that's going to have a lot of stress degree days on the corn. The Mid-South places in Arkansas and in Kentucky and Texas are really suffering from very dry conditions. If you're a bear, you're going to point out that they might be optimistic that they're going to build some sort of grain corridor in the Ukraine, and that would help open up exports from the Ukraine to the rest of the world and add global supply in the market. Crop conditions were steady here in the yesterday's planting, or excuse me, in yesterday's crop condition report. Corn was good to excellent, stayed at 64%. You can talk about how Brazilian production is looking like it's going to ramp up. The Brazil is going to have a record corn crop, it looks like. Maybe not quite as high as what they're looking for or expecting, but still very good, and a new record for them nonetheless. And they're already projecting a record for next year as well. If you have any questions, feel free to give our office a call at 712-227-1110. Thank you and have a nice day.